Okay, guys, see. Now we are going to discuss about normal depreciation, which is available in the case of all assessees who are doing any business or profession. Any business or profession. Now we are not going to talk only about assessees in power business. We are going to talk about all assessees. Okay. So, assessee. Say yes, sir. Are you any person? No, not a person. Who are you then? What? What did she say? Ghost. So you are any person. Okay. You are engaged. Not married. Engaged. Engaged in any means any business or profession. Now for this business or profession, assets are acquired. So you are acquiring assets which you want to use for this business or profession. Now what are you going to do? You are not going to take single assets now. Now you are not going to see individual assets which you used to see in the case of power business. Yes or no? Hey, come this side, no, you all. I am not able to see anyone. Still you will sit this side. Occupy all these benches. No, so many benches are there. Come this side. Come this side. Sanjana, move this side. I prefer to sit behind only, no? Adarsh? Gokul, why don't you tell your friends? Okay. Now see, assets are acquired. Earlier, you used to check. In the case of power business, single asset, the depreciation was available on single asset. Now, the assets which you have acquired, you are supposed to make the block of assets. Yes or no? And the block of these assets, you are supposed to find out the value of such block. And on this value, you are supposed to apply the prescribed rates of what? Depreciation. Now the rates are prescribed. Now the rates are prescribed in Appendix 1. Because Appendix 1A rate were given for individual assets. And this Appendix 1, here the rates are given for block of assets. Here the rates are given for block of assets. Yes or no? So Appendix 1 is given in Rule 5, Subrule 1. So in the Rule 5, Subrule 1, Appendix 1 is there. In Appendix 1, you will get prescribed rates of depreciation. These rates you are supposed to apply on the value of each asset? No, block of assets. And by applying these rates, whatever depreciation you are going to calculate, that depreciation will be allowed on WDV basis. What basis, sir? So, under the Income Tax Act, normally the depreciation is calculated on WDV basis only. And on the value of each asset? No. On the value of block of assets. And that depreciation is allowed normally to all the assessees doing any type of business, any type of profession. Okay. So, assessee. Do you have assets in the business? Yes. So, the block of assets, first of all, make the block of those assets and determine the value of that block. On that block, now you will apply the rates which are prescribed in Appendix 1 to Rule 5.1. Yes or no? And after applying this rate, you are going to get depreciation, which you are going to claim on what basis? WDV basis. This is the manner in which you are going to calculate and claim the depreciation. We are going to allow this depreciation only to you. Understanding? So now first of all, what is block? Then how to determine this value? And what are the rates which are prescribed? All of them you must know. Okay. So note number 1. What is block of assets? Note number 2. How to determine the value of these assets? And note number 3. What are the rates prescribed? All these prescribed rates, you are supposed to remember few rates out of them, and that too also block wise. Yes or no? So first of all, what is block of asset? What is block of asset? So block is defined under section 2 subsection 11. Which section? 2 subsection 11. Block means one asset or multiple assets. So it is a group of assets having which are of same type and having same rate of what? Depreciation. So group all those assets which are of same type but having same rate of depreciation. So can I group all the furnitures together? Yes. Furniture. Any type of furniture I will buy. I will have to create a separate block for that furniture, because the furniture is depreciable at the rate of 10%. So 10% is the rate of depreciation which is applicable on furniture. Then building. Building will have 4 different types of blocks. Building will have 4 different types of blocks. Some buildings will have 5% rate. Some buildings will have 10% rate. Some buildings will have 40% rates. All those buildings are to be grouped together. Plant and machinery, multiple blocks are there in the plant and machinery. Intangible assets, separate block will be made, because on intangible assets, the depreciation rate is 25%. So one block will be made for intangible assets. All intangible assets will go in that block. Yes or no? And that will be depreciable at what rate? 25%. And if you have plant and machinery will have different blocks. Plant and machinery which is motor car, plant and machinery which is used in your medical profession as life-saving medical equipments. Okay, then there will be pollution control equipments. Different types of plant and machineries block has been prescribed. So what is the block? Meaning of the block is it is a group of those assets which are of same type and having same rate of depreciation. It is nothing but a basket. It is nothing but a basket. In that basket, you keep on putting all those assets together which are of same type, having same rate. For example, in my previous year, 25-26. In my previous year, 25-26. This is the year in which I have started the business. Now, in this year, to do my business, will I buy some assets? Yes or no? So, in this year, on different dates, I am buying different types of assets. Okay. For example, on 5th of May 2025, then 6th of June 2025, then 7th of July 2025, 8th of August 2025, 9th of September 2025, different dates. Okay, 10th of October, 2025, 11th of November 2025, 12th of December 2025, then 13th of January 2025, then 14th of February, wow, what a date, 2025, and then 15th of March 2025, starting from May. Okay, different dates, different types of assets I am buying for my business. So to do the business on different dates, what type of asset I am buying? Let's say, for example, first I buy furniture, then again I buy one more furniture, then I buy a building, then also I buy a building, then I am buying plant and machinery A, then plant and machinery B, then plant and machinery C, then I am buying some intangible asset. Yes or no? Again I am buying some intangible asset. Then again I am buying some plant and machinery D. Then I am buying plant and machinery E. Okay. During this entire previous year, different assets I am buying at different dates. All these assets are to be used in my business or profession. Now, will I have the same cost for all the assets? Or will I buy them at different cost? So let's say furniture I am buying for, first furniture I am buying for 50,000. Second furniture I am buying for example 1 lakh rupees. One building I have bought for 20 lakh rupees. Another building I am buying for 40 lakh rupees. Yes or no? 20 lakh, 40 lakhs. Plant and machinery A, 1 lakh rupees. Plant and machinery B, again 1 lakh rupees. Plant and machinery C, 4 lakh rupees. Okay. And this plant and intangible asset. One intangible asset I am buying for 5 lakh rupees. Another intangible asset I am buying for example 2 lakh rupees. Now plant and machinery D and plant and machinery E, I am buying it for 3 lakhs. This I am buying for 2 lakhs. So the amount at which I am acquiring these assets is nothing but actual cost. So these are the costs which I have incurred during this year to acquire these assets. All these costs are my business related expenses, but they are capital in nature. These are capital expenditures which are incurred to acquire different assets. These costs cannot be allowed at once, at one go. Just imagine if this entire cost is allowed out of this year's business income, what will happen? This year's business income, this entire cost will eat the business income. So these costs are to be allowed in small parts in the form of depreciation. But for each asset, just imagine I am talking about a small business done by an individual. Imagine about Reliance. Reliance will in one day, they will buy so many assets, they will sell so many assets. Forget about the entire year. I am talking about a year for this individual. For myself, if I am doing a business, I can buy these many assets in a year. And just imagine on each asset, if the depreciation is allowed to be claimed. So it will increase my workload also, and at the same point in time, the government will, income tax department will also be in tension. That bloody this assessee is claiming depreciation, whether he is claiming the correct amount of depreciation or not. Even they will have to calculate my depreciation, and even they will have to verify whether the depreciation claim made by me is correct or not. So they will have to ask for each and every asset, when it was acquired. Okay, for this asset, from this date to this date, you have calculated depreciation. Oh, depreciation on this asset was at this rate. Oh, for this asset, you are following this method. Why to do all such, hard-working things? Keep the things simple. Make the block of assets. At least those assets will be clubbed together, grouped together, which are of same type, having same rate. Now for at least those assets, you will have single value. Instead of multiple values, you will have single value, and on that single value, we are giving you one rate. Apply that rate and calculate depreciation. Will be easier for you also and easier for us also to identify. verify whether you have claimed the depreciation correctly or not. And instead of calculating and claiming depreciation for the number of days used, number of months used, just calculate the depreciation for full year. So we will not have to ask for so many details from you, because it will be very painful for you also to provide all those details to us. And at the same time, it will be very painful for us also to calculate depreciation again for you to verify whether you have claimed the depreciation correctly or not. With that intention, to keep the depreciation calculation simple, they have come up with a concept of block. Now you are going to create a block. So all the assets you will put in the same block, no? All the assets. So you will form blocks. Block of furniture will be made separate, because on this furniture the rate of depreciation is 10%. For the building the rate is 10%. For plant and machinery the rate is 15%. These three plant and machinery are 15%. Intangible asset the rate is 25%. Yes or no? This plant and machinery D and plant and machinery E are those plant and machinery on which the rate is 40%. So now how many blocks you can see? Furniture, one block. Second block, building. Third block, plant and machinery having a rate of 15%. Then intangible assets. Then again another block of plant and machinery. That block you will have to make separate. Why? Because in that block you will put all those plant and machineries which are having 40% rate. You cannot put those plant and machinery in the earlier block of plant and machinery, because in that block, whatever plant and machinery is there, on that, the rate of depreciation is not 40%, it is 15%. So now if you see, furniture one block will be made. Now in this block, furniture 1, furniture 2, both the furniture will come. And what is the total value of this furniture? 1,50,000. So what will be the total value of this block? 1,50,000. Understanding? Now second block will be for building. How many buildings? Building 1, building 2. Both the buildings will be put here. And what is the value of the buildings? 60 lakhs. Understanding? Then next block will be for plant and machinery. Plant and machinery depreciable at 15%. This building depreciable at 10%. Furniture depreciable at 10%. Now the plant and machinery depreciable at 15%. 1 lakh plus 4 lakh will be 6 lakh. Plant and machinery A, B and C. These three plant and machinery, what is the value? 6 lakh. Then again you will make a block of intangible assets. Which assets? Intangible assets. So intangible assets IA1 and IA2. Both the intangible assets, what is the value? 5 plus 2, 7 lakhs. Now again you will, because on intangible asset the value is 25%. Plant and machinery having a rate of 40%. Plant and machinery D and plant and machinery E. What is the total value? 5 lakh. This way you are going to create different blocks. Now tell me, in the first block, can you see furniture? Hello? Entire furniture is purchased in this year and put to use in this year. If the date when the furniture is put to use is not given, we will assume that all the assets are put to use on the same date immediately. So tell me, 1, 2, 3, 4, 5. 5 till here. All the assets are put to use before my birthday. On all those assets, the rate will be full rate and full year's depreciation will be allowed. So tell me, in the block of furniture, can you see any furniture which was purchased in this year and put to use for less than 180 days? No. So on the entire value, you will claim 10%. Yes or no? Now no need to calculate on single asset. Calculate on the value of the entire block. But that value will be the total cost of all the assets which are there in the block. How much depreciation will be on this block? Come on, tell me. How much depreciation on this block? 10%. So how much will be the amount of depreciation here? 15,000 depreciation. Yes or no? Now tell me, building, all the buildings. What did I say? all the buildings are purchased and put to use before my birthday. Can you see? What is the value of these buildings? 60 lakhs. On this entire 60 lakh, you are supposed to claim 10%. That will be 6 lakh rupees of depreciation on this block. Meaning that entire 1 lakh 50 we are not going to allow. But out of that 1 lakh 50, claim only 15,000 this year. Balance 1 lakh 35 in subsequent years. That will become opening in the next year. That will become opening in the next year. But this year, out of 1 lakh 50, we are not going to allow entire 1 lakh 50, only claim 15,000. What about the building? 60 lakh cost you have incurred in this year. Will we allow the entire 60 lakhs? No. Out of that 60, claim only 6 lakhs. Balance 54 lakhs, subsequent years. That will become opening in the next year. Opening WDV of this block. Opening WDV. Closing WDV will be 54 lakhs after depreciation. So opening for the next year will become 54 lakhs. Now tell me, plant and machinery. Only plant and machinery A is purchased in this year and put to use for 180 days or more. 9 September, before my birthday. Plant and machinery B and C are put to use after my birthday. Meaning less than 180 days. On those, will you claim depreciation at full rate or half rate? Now out of this entire value, what did I say? Out of this entire value of A, B and C, what was the value of B and C? 1 lakh plus 4 lakh. It is 5 lakhs. So out of the entire 6 lakh, on 5 lakhs, you can claim depreciation at half rate only. Because that 5 lakh is the value of those assets in the block which are purchased in this year but put to use for less than 180 days. Hello sir, so on 5 lakh, what rate you will apply? 15% or only 7.5%? So apply 7.5% on 5 lakh. 37,500. And on the balance 1 lakh, you are supposed to apply 15%. That is 15,000. So 15,000 plus 37,500 will be 42, 52,500. 52,500. This will be the depreciation for the plant and machinery in this year. Meaning that out of the 6 lakh cost which you have incurred in this year, only 52,500 will be allowed in this year. The balance will be allowed in the subsequent year. That will become the opening WDV in the next year. Understanding? Hello. Now WAFA will calculate the depreciation on intangible asset. Come on, Bhumika, calculate. You also calculate. WAFA, everyone start calculating. What will be the depreciation on intangible assets? 7 lakh into 25%. Gone. All the intangible assets are purchased in this year but put to use after my birthday. Can you see? Meaning less than 180 days. On that, depreciation will be full rate or half rate. So on the entire value, in this entire value, how much is the value of those assets which are purchased in this year and put to use for less than 180 days? Sir, entire 7 lakhs. On that you apply 12.5, half rate. What will be the value? 87,000. And sir, D and E, both these plant and machineries are also put to use for less than 180 days. 14th February to 31st March. 15th March to 31st March. Yes or no? Then on this 20% will be 1 lakh. Are you all getting this? What is happening? Okay. Now see how to determine the value of the block. That you have understood. How to determine the value of the block? Do nothing. Identify the assets which are of same type. Identify the assets which are of same type, having same rate of depreciation, and create a block of those assets, meaning a basket. And in that basket, put all the assets, and what will be the value of that basket? Total of the actual cost of those assets which are there in that basket. So what I have started doing? I have made a basket. Name of that basket is plant and machinery, depreciable at the rate of 15%. So plant and machinery A will come. plant and machinery B will come. The moment plant and machinery A comes, the value of this basket will be 1 lakh. So the moment I buy one asset, I will have to create a block for that. I cannot keep an asset individually with me. No. Individuality of the asset is not allowed only. You have to put the asset in the block. So earlier, did you have any plant and machinery block? No. So the moment you are going to buy a plant and machinery having 15% rate, you will have to create a block, meaning a basket. Now in that basket, the name you will give. What is the name of this basket? Plant and machinery depreciable at the rate of 15%. Now every plant and machinery having a rate of 15% will fall under this block, fall under this basket. So first plant and machinery was plant and machinery A, which was acquired for 1 lakh. Put that plant and machinery in this basket. What is the value of this basket? 1 lakh. Now next plant and machinery is plant and machinery B. On that also the rate is 15%. Don't you think I already have that basket, which is plant and machinery depreciable at 15%? In that same basket I will put B. Now in this basket B will also come. And the moment B will come, the value of this basket will increase. It will increase to, see, A was 1 lakh, B is also 1 lakh. So now the value of this basket will be 2 lakhs. This is nothing but the value of this block. Now the moment I will buy plant and machinery C, even that has a rate of 15%. What I will do? I will put that also in the basket, and now the value of the basket will also increase. How much will be the value now? See, 4 lakhs. So now the value of this basket is 6 lakh. Understanding? 6 lakh. And remember one thing. As and when you put any asset in the block, identity of that asset is lost. Now the assets are not identified. Individuality of that asset is gone. Now never give any identity to that asset. You are not going to talk in the terms of asset, asset, asset. No. You are going to talk in the terms of block, block, block. Because the moment you put any asset in the block, identity of the asset is gone. Understanding? So plant and machinery A, plant and machinery B, plant and machinery C, gone in the block. Identity is gone. Now what exists? Block. And what is the value of that block? 6 lakh. Don't you think this 6 lakh is the total of actual cost of all those assets which are there in the block? Hello? Total of actual cost of all those assets which are there in the block. So in the block, how many assets are there? 3. What is the total of actual cost of all those assets? 6 lakh. That is the value of this block. Value of the block is nothing but total actual cost of all the assets which are there in the block. Now instead of allowing individual actual cost in the form of depreciation, take this total actual cost in the form of depreciation. The things will be more easy for you. But out of this 6 lakh, no, out of this 6 lakh, on 5 lakhs, you are not going to calculate depreciation at 15% rate. Because the 5 lakh out of this 6 lakh is the value of those assets, is the actual cost of those assets which are purchased in this year but put to use for less than 180 days. On that 5 lakh, you are going to apply 15% or half rate. Half rate. But the depreciation will be calculated for full year. And that depreciation you calculated was how much? Tell me. 37,500. Yes or no? And on the balance value of the block, this is the balance actual cost. Okay. On that, always at full rate. How much? 15,000. So 37,500 plus 15,000 will give you 52,500, which you have already calculated earlier. Yes or no? Now this 52,500 out of 6 lakh will be allowed in this year. So how much cost still remains? The assets also remain in the block and the cost also, the value also remain in the block. How much? 3 assets are still there in the block. And against these 3 assets, how much cost is still there? 6 lakh minus 52,500, 5 lakh 47,500. Now what will happen? In the previous year 26, 27. In the next year, this same block, plant and machinery, depreciable at the rate of 15%. Will these assets be used in the business in the next year also? Yes or no? So will this block be used in the business in the next year also? Yes. So take the remaining cost in the next and the subsequent years. And any asset bought in the next year will be added to the same block. So what will be the opening value of this block in the next year? So now you will take opening WDV. In the opening, how many plant and machineries are there? 3. And how much is the value? 5 lakh 47,500. Now see, whatever new plant and machineries will come in this year, having same rate. For that, will you create a separate block or block is already created? In that block only you are supposed to add. But wait, these will be the new plant and machinery which you are buying in 26-27. And in 26-27, they can be used for less than 180 days also, 180 days or more also. Or they cannot be used also. So what are you going to do? New assets will come. That means additions. New assets will come in the block. That means additions. So in these assets, new assets will be added. And cost of those assets will also be added. So you are going to do additions. Additions means the plant and machineries which will be acquired in this year, 26, 27. But they might be put to use for less than 180 days, greater than equal to 180 days, or not used also. Why not used? Asset acquired in this year and not used in this year, on that you are not going to get any depreciation. That value will be separated. Asset acquired in this year and used in this year for less than 180 days, you will apply half rate of depreciation. Getting my point, what I am trying to tell you? So in order to identify that value out of the total value of your block, you will have to segregate these assets right now only. So at the time of addition, be very clear that additions are happening for plant and machinery. One plant and machinery, one plant and machinery, one plant and machinery. One plant and machinery which you acquired for a cost of rupees 1 lakh. And that was used in this year for less than 180 days. One plant and machinery you acquired for 2 lakhs in this year, but that was used for 180 days or more in this year. One plant and machinery whose cost was 2,50,000 which you acquired in this year, but which you could not put to use in this year. So out of the total value now, 5,47,500 plus these, all the values will be added. Out of the total value, on this value, there will be no depreciation. On this value, there will be half rate of depreciation. On this and this value, there will be full rate of depreciation. Understanding or not? So tell me, how many assets are there in the block now? 6 assets. How much is the total cost of those assets now? 10,97,500. This is the total assets in the block, and this is the total cost of those assets. This cost includes cost of those assets which are acquired in this year and remaining cost of those assets which were already there in the block. Understanding? I am studying and I am understanding. You are understanding or not understanding? Sure. Now tell me, if the assets will come in the block, don't you think that the asset can also go out of the block? How will they go? Sale, scrap, hello, salvaged. So, like the assets are coming in the block, when you are bringing the assets in the business to be used in the business, sometimes you don't want any assets to be used in the business. Can you sell the assets? Can you scrap the assets? So assets will go, but they will go from the block only, no, where they are. So do you have plant and machinery in the block? Out of that plant and machinery, if some plant and machinery is going out of the business, meaning sold, scrapped, etc., then they are going to go from this block only, no? Hello? So how many assets are going? For example, 2 assets gone. Coming means addition. Going means deletion. 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 So how many assets are going? 2. Part of the assets going, part of the block going. And when the assets will go, don't you think you will get something? For example, you received 2 lakh rupees. How much? Meaning, out of 10 lakh 97,500, you recovered 2 lakhs. So that amount which you have recovered out of 10 lakh 97,500, we are not going to give you that amount as a deduction in the form of depreciation. Out of 10,97,500, which was the value of 6 assets. 6 assets having a total cost of 10,97,500. Out of 6, you transferred 2 assets and recovered 2 lakhs. So out of the total value, you have already recovered 2 lakhs. Don't claim that 2 lakh in the form of depreciation. We are not going to allow that 2 lakh. Because that cost to the extent of 2 lakh you have already recovered, no? So whatever cost you have recovered, to that extent, we are not going to give you any depreciation. So for example, 2 assets are going and you are recovering how much? 2 lakh. Reduce that. Now how many assets are there? Against this asset, how much value is there? 8,97,500. You can claim this remaining cost. As on the last day of the previous year, only these assets are remaining. Having this much cost in the block remaining, yes or no? Only this cost against these 4 assets can be claimed in the form of depreciation. Understanding? What rate you will apply? What rate you will apply on this 8,97,500? Full rate 15%. Now you will have to ask yourself a question. In these 4 assets, what did I say? If this asset is also there, then out of this value on 2,50,000, you cannot claim any depreciation. In these 4 assets, if this asset is also there, then out of 8,97,500 on 1 lakh, depreciation will be at half rate. So let's assume that this asset is also there and this asset is also there. These 2 assets are not transferred. Any other 2 assets are transferred. Yes or no? That means out of this total value, on 2,50,000, will you claim any depreciation? No. Because this 2,50,000 is the value of that asset which is still there with you, which was not used at all. Yes or no? Out of this, on 1 lakh, you will calculate depreciation at half rate, 7.5%. Why? Because at the end of the day, whatever assets are there, in those assets, you still have that asset which you have acquired in this year and put to use for less than 180 days. So, out of the total value, the value to the extent of actual cost of that asset which was purchased in this year and put to use for less than 180 days, on that value we cannot give you depreciation more than half rate. Claim half rate on that. Now, how much balance is remaining? How much balance is remaining? How much? 547,500. On that you apply full rate. There is no problem. So on this, how much will be the depreciation? Nil. On this, how much will be the depreciation? 7,500. And on this, how much will be the depreciation? Come on, do it fast. How much? 125. 7,500 plus nil. Do the total. 89,625. Now tell me, can you tell me what is the closing WDV? In closing, I will have 4 assets. I am having 4 assets. So closing I am having 4 assets. But this entire value will not become my closing, because out of this value, what did I say? Out of this value, some value is allowed as depreciation under section 32 for this year. So reduce that. 8,07,875. This is the remaining value, remaining cost of these four assets which are there in the block. Next year, this will become opening. Likewise, the calculation will happen every year. Did you understand? Hello? This is the way in which the blocks are formed and the value of the block is determined. How to determine the value of the block? You will have to make a small format. You will have to make a small. What will be the format? Come on, tell me. First of all, you will write the name of the assets which are there in the block. For example, furniture is there. You will write down furniture. So first of all, you will have to give the tag. You will have to give the name to your block. So what name you can give? Furniture, depreciable at 10%. So all the assets in the block will be furniture having 10% rate. For example, in my example, we have taken which block? Plant and machinery block, no? So what we are going to write? We are going to write the heading of the block. What? Plant and machinery depreciable at the rate of 15%. This will be the heading of the block. Okay. Now in this block, what I am going to take first? Opening WDV as on first day of my previous year. So on 1st April 2025, as on the first day of my previous year, how many assets are there? And what is the remaining cost of those assets in the block? See, if I have been using these assets in my business since earlier years, then there will be assets also and value also. Then there will be a opening WDV. But if these assets were never used in my business earlier, I am buying these assets for the first time in this year, then this block will be formed for the first time in this year. That means opening will be nil. This block will be formed by additions in this year. Yes or no? Hello? So now in this opening, what I am supposed to do? Add. Add what? Add additions. During which year? During your previous year, 25-26. Now please bifurcate this additions. Additions made during this year, 25-26, and put to use. Put to use for greater than equal to 180 days, less than 180 days, and not used in previous year 25-26. Okay, so how many assets? What was the actual cost? How many assets? What was the actual cost? How many assets? What was the actual cost? You add all of them. So now you are going to get what? Total number of assets which are there in the block, which should be there in the block as on the last day. But these assets will not be there as on the last day. Why? Because during the previous year, out of these assets, few assets are going also. Understanding? This should be the remaining value in the block. But this will not be the remaining value, because out of this value, some value you will recover at the time of deletion. So what are you going to do now? Out of this, less. Less what? Deletions. Deletions during previous year, 25-26. These assets gone, and against this asset, this much amount recovered. So now what are you going to do? Come on, tell me. Now at the end of the year, as on 31st March, as on 31st March 2025, 26. These assets are there. Against these assets, this much cost is still remaining. Now out of this cost, some cost will be allowed in the form of depreciation. Now calculate the depreciation. Hello? Depreciation as per section 32 subsection 1 clause 2. Calculate that depreciation, reduce that depreciation. So what will happen? These assets will remain and this value will remain. This will be your closing WDV as on 31st March 2026. This will become opening in the next year. Please request you to by heart and remember this format, because this is the only way in which you can calculate the value of the block and the depreciation. Now see, depreciation has to be calculated on this value which is there as on 31st March 2026. So this value is also known as depreciable value. This is depreciable value as on 31st March 2026. On this amount you are going to calculate the depreciation. So whatever depreciation is calculated on this value. Out of this value, on some amount, no depreciation.